Good morning, good afternoon, good evening, and welcome. Good morning, good morning. Okay, Apple earnings, exactly like I just said it would, just on our last show and the closing bell. Crazy price action with Apple earnings just some moments ago. Did you all see what happened? Was you all watching it? Was you all paying close attention? The stock price shot up all day long. It went up. Then it went up another 2 or 3% right as the announcement came that it made money on earnings, that the earnings was a beat. Went up, and then it was all dumped, and now it's trying very difficult to break up again. Apple is too expensive. We broke down the reaction on our earnings, on our full review a few moments ago. We covered the full earnings, and look, it did exactly what we said it would do. It's too expensive. There's a difference between being an Apple investor than buying Apple. There's nothing wrong. Oh, David, new member.
David Davidson has become a member.
Hey, David. Fantastic. Are you in the stream right now? I'll give you all your benefits. There's a very different thing between being a an investor in Apple than buying Apple. If you bought Amazon 3 years ago, great. If you buy it today and hold it for 5 years, maybe. But it doesn't make sense today, at today's prices, to buy it today. It's too expensive. It's had too much of a pump today. You're more than likely to see it cheaper tomorrow than you are now. And we explained why in a full breakdown, a full analysis just half an hour ago. Give everybody the warning, and I hope you all paid heed to that, because we need to see it in the 150 region before we buy it. Anyway, what you do is up to you, of course. Anyway, let's get straight into it. If you watched the closing bell show, you would have seen me tell you that Apple was going to go down and it was too expensive, and it did exactly that. But before it did it, it tried to pump and drag you in just before it did it. All right, okay, let's get straight into our show and let's see how Apple earnings is. We've got 19 minutes to go before Apple earnings. Very, very good indeed. Welcome everybody to the show. There will be a full breakdown of Apple coming up later on. It'll be posted for the members only, a full review going out about the full technical breakdown of Apple. And then we'll do another one tomorrow after all this is settled down. There'll be another one tomorrow. So, Apple earnings coming up in just 20 minutes time. Just make sure that we are muted. Yep, sound coming through. Let me make sure we've got the audio coming through from Apple. Yep, looking good. We'll mute that. Just make sure that we've got no copyright. With Apple, is all over that, so we have to be very, very careful. Great. Let's look for some entries. Let's look at the overall portfolio, how it's affected the market. Seeing Apple beat is good, but don't overbuy it. Don't overpay for anything. Doesn't make any sense. Good luck, everyone. Jojo S is here. How are you, Jojo S? My portfolio is good, up 7.69% today. This is my position today, up 2,610. Pretty good. Very good, actually. It's a good day for me, that. Very pleased with that. Let's have a look at space. It went down a little bit after hours, 1%. Didn't get the Thursday night bounce and the beginning of a potential squeeze, unfortunately. So we're still not squeezing at the moment. There's more work to do there. Palantir is starting to sell off, as we'd expect. Just looking now at my Next Year Energy. Next Year Energy dumped on the close. That's a shame. It still had a good day, but it gave away its gains today. Not too worried about that. Enphase held up because it's, in fact, it's up in the after hours, 78.95. Coca-Cola is flat in the after hours. Johnson & Johnson is still going up. Yeah, up in the after hours. Kenvue is up in the after hours. Chevron, up today. Very nice. Flat on the after hours. Tesla's looking good. All looking good. Yeah, we've got no concern with any of our stocks' performance at the moment at all. Microsoft went down and up at the same time as Apple. So simulated trading. Looks like they did it together. It's virtually identical to the second by the same amount, by the looks of things, percentage-wise. Just going through all my positions, making sure everything's where it needs to be, but it is. Okay. All right. So what we'll do now, we will just, before we go to the earnings, we've got 16 minutes to go. Let me check around the studio. Yeah, that looks good. Is David Davidson here? David Davidson, are you in the chat? I need to give you all your benefits. I don't think you're here. If you are, come on in and I'll give you all your benefits. Okay. Let me just do that. Right. Apple earnings, just a very, very quick update to follow our full technical analysis for you. As we saw, at the moment the announcement of the earnings came out, the stock popped up 2%. It immediately shot down 2 to 3%, bouncing all over the place. It has beaten on earnings, but just as I expected, it's overbought, massively overbought. It doesn't make sense to buy Apple at these prices. The market tried to influence the stock to go up. It was a massive buy. It didn't follow it up, though. The very whales that bought it dumped it immediately. No one can move the stock 2% unless they're a collective whales or institutions. You and I can't do that. It popped up in 1 second and then straight back down, a 4% swing. That shows you that the stock is overbought. That shows you that they're trying to make some money. And that's exactly what we did say would happen. And when we did a full technical breakdown of the stock just before the earnings, we will now do another breakdown of the earnings tomorrow after all of this is settled down. And we will compare the two to see how we go forward here with Apple. Apple's a great company, but it's too expensive. On a base case, you've only got a 14%, which doesn't make any sense whatsoever. You are better off buying many other companies at this current position. Anyway, this is just a quick update for Apple, and we'll do more of it tomorrow. Till next time, take care of yourselves and each other. All right, there's Apple. What time was that for the show? I'll just put that in afterwards. 7 minutes. Space. 7 mins. Apple earnings. Okay, there's that. We're watching closely. Welcome, everybody. Welcome, everybody over there on TikTok. How you all doing? Welcome to the studio. Let me just show you around. That's the back of the studio. And here is the front of the studio. If I just give you a quick tour. This is what everybody is seeing on YouTube. This is how the main studio is structured. Let me just see if I can turn you around. There you go. That's the front of the studio. That's what you see there. My trading positions. If you join me on YouTube, that's what you get to see. But you're looking at my broadcast over here, which is let me just reset you. Just wanted to show you what you can see. Probably shouldn't have done that because now I'm trying to get it back on again. I've broken it. It's like, why did I even try to do that? There you go. We'll get it there in a sec. We'll get it there in a second. There you go. I'll leave it alone. I won't do that again. Too difficult to swing it round. I just wanted to show you what was the other side of the camera. There you go. All right. That was a bit of fun and games, wasn't it? the clock, 12 minutes to go. Welcome everybody to Apple earnings. A few minutes to go, 12 in fact, and then we'll bring in the earnings. Very expensive stock is Apple right now, too expensive. We did the full breakdown, that'll be out later. A full technical balance sheet analysis, insider trading information, who's buying it, who's selling it, what the margins are, what the intrinsic value is, all of that. It's a members-only video until it's for the first few hours, and it is time sensitive, of course, and then it will be available to the general public later on. For the members, it'll be out this afternoon. Okay. $12 minutes to go. Now, if we got it, if it went to 150, which it won't, of course, tonight, I'd buy it. I'd buy $10,000 worth of it. But at this level, no. It wouldn't make any sense. Welcome, everybody. 11 minutes to go. Zach says, I don't hold Apple. I like Samsung. Good luck, everyone. Good luck to Apple holders. Nice little reaction on space today. I might offload before earnings and buy the drop. Any thoughts? Jojo, yeah, I mean, I'm not selling anything, but I understand why you would do that. I mean, profit is profit. It's always profit. It's always good. I sold Apple yesterday at 50% increase. Today would have been better, but thank you for your advice. Stuart Burns, you did the right thing. Let me tell you why. Even if you tried to have sold it at that pop, I don't know if you were watching it, when it went up quickly, you wouldn't have necessarily been able to. Even if you'd set a limit order, because it went so quick that it doesn't guarantee, and I don't know if you had a stock trail order, doesn't guarantee, it's why there are brokerages that provide insurance for stock trail orders, doesn't mean you would have definitely got that price. So you did the right thing selling it yesterday. It's overvalued. It's too expensive. If you look at the intrinsic, the base case, the worst case, the best case, best and base are different. I just want to be clear on that. Look at the deflationary prices that are coming into Apple, margins that will reduce. Then you've got to look at what else is available. It's not the best thing to buy right now. You know, we all know that Apple's a great company. It's not about whether, it's not a popularity contest. It's about whether it's the best place for you to put your money today. And we showed you on the show, on the closing bell, I did a full technical analysis of the balance sheet, of the margins, of the investable capital, and all the rest of it. Outstanding debt, yada, 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 all of it. Insider trading, who's buying, who's selling, all of it. And that tells you quite clearly that this would have been the wrong time to buy. So you've done well to sell it. There are better value stocks for you to buy right now. Of course, if you bought it today and in 5 years' time, you could be up, but you don't buy something to park your money for 5 years. I mean, that doesn't make any sense, does it? Anyway, thank you, Stuart, for saying so. I sold Apple yesterday at 50% increase. Today would have been better, but thank you for it. No, you might not have even have sold it. That pop, you may never even have got that anyway. I did the same thing with NVIDIA, but profit is profit every day. Of course it is. Absolutely. Just make sure that you are taking advantage of your Roth IRA, not your brokerage account. So you are selling tax-free. If you're doing it on your brokerage account, you're paying taxes. No point doing that. No point wasting 20% giving it to the government, is there? So make sure you're selling it properly. I think Tilray is starting to look attractive at this price. Thoughts? Tilray, no, I won't. I don't think I'll touch it again. My thoughts on it are that I want to get out of the stock. Period. I think the company's lost direction. This is not a company like Virgin Galactic, which is shorted and beaten up and so on. This is just waiting to become a king. Tilray Brands has lost direction. It's not a king anymore. It's lost its direction. I don't think it'll ever be the company that it started out and promised to be. So, for me, let me just improve it for TikTok a minute. There we go. Is that better? That's better. For me, it's I've got no interest. I didn't buy Tilray for a brewery company. I bought it for the best cannabis company. It's not anymore. They'll tell you it is. They like telling you that they're the number one. They're the number one for cannabis, but they're really not. Not anymore. If you look around, there are companies more focused on that mission. They are what they say they are. Tilray Brands. They're a company that acquire other businesses and build up a collection of businesses. I didn't buy that. I know that's what they always were, but they were predominantly, their focus was cannabis. Now it's buy any bloody thing to add to their portfolio. That's not what I'm interested in. So, no, not interested. Jojo, there was usually a drop on a flight, but today's reaction, as you said, was good. So I'm not so sure about selling prior to earnings. Maybe there's a change in sentiment. Well, that's what we've worked for. What I spent 2.5 years campaigning for, folks. 2.5 years to get communication with astronauts, with team on the ground, with investor relations, building up the army of investors. We've got that. Things are moving. The economy is repairing itself. Inflation's coming down. Rates are coming down next year. Every single reason to own Virgin Galactic is there. We've done the work. We've dug the ditches for 2.5 bloody years. I've not sold a single share. Jojo, I am on CGC now. You've moved away from Tilray. Hi, Jojo. Not shooting you down, but feel like us government, like the US government, have too much going on with wars. Yes, I agree. 100%. I've said it time and time again. The issue of getting legalization with the government is so far down the the pecking order. Tilray Brands could go bust by the time they are waiting for that. They're just not on the ball anymore. Cheers, Martyn, Emma, MSK, and Liam. I love to get different perspectives. That's what it's all about, isn't it? And we love you too, Josephine. Is Josephine in the show? Who's Josephine? Who's Josephine? Oh, I see. Jojo S. Oh, I got it. I got you. I got you now. It took me a while. Yeah, I get it now. Martina Lucas Investor. Oh, I see where we're going. I see what's happened to the show. I see what we're trying to do. Yeah. All right. Whatever. Ooh. Right. Okay. Portfolio's going up in the after hours. Virgin Galactic is going up again. Yeah. Amazon. Apple selling off. NEE. Enphase going up again. 79.25. Oh, God. Look at this. Why do we get people like this come in and say silly things like this? Why do we get people do this? Why are you talking Virgin? They are going bankrupt. It was announced months ago. What on earth are you talking about? Do you know what you're talking about, BP23? What are you talking about? Nothing was been announced. They're not going bankrupt. What are you on about? Who are you talking to? The clown of YouTube? Who the hell's that? Oh my gosh. Come on, BP23. If you're going to make up stories, make them credible, give them some substance, have some reasoning. That makes no sense at all. Do you read the balance sheet? Do you read the cash burn? Do you know what the margins are? Do you know who the customers are? Do you talk to people on the ground? Do you have a clue what you're talking about? That makes no sense at all, BP23. It was announced months ago. They're going bankrupt. Oh my gosh. Jojo, I trimmed some off. If it drops before earnings, will buy back cheaper. Dolly Parton, Jolene. I can do a good version of Jolene. You'll like that. Are you coming tomorrow night? Friday night, the Virgin Galactic after party. I'm doing sold at 55. They're absolutely going bankrupt, bud. Are they? I'm not your bud, mate. I'm not your bud. Ridiculous. I do. He says he does. Okay. Can we get the boo sound effects for that clown? Well, that's good for you, BP23, but let me tell you, Richard Branson this very morning at breakfast played my Virgin Galactic song. I'm talking to the astronauts who actually fly on the bloody rocket. I also have the world's largest collection of investors, retail investors in the world. One of those top 10 was in the chat this afternoon. And I spent 2.5 years, 10 hours a day studying Virgin Galactic, and you're coming on telling me you sold it for $55. So basically you sold it at the very, very, very top of the market, well, virtually like 99%. And apparently it was announced it's going bankrupt, but there's no such statement ever been made. And it's got 1.5 years of cash to burn. Anyway, yeah, you're absolutely right. Clearly you know more about it than we do. They are absolutely going bankrupt. Absolutely right. 100%. Oh my God. I don't know why people bother. Sold at 55. Yeah. He's probably talking about Vorb. Yeah. Probably talking about a completely different world. Anyway, I love it. I love when these people come on and talk rubbish. Right. Here we go. The earnings. Apple earnings. Any second now. It's down 99% since 2002. Bro, I'm not your bro. And we don't do swearing on this channel. We're investors here, not creating nonsense. Yeah, boo. He's enjoying himself. You must also be big into Mullen. You've clearly not watched my video, have you? I've reported on the scandal of Dave Mitchery many times. So, reported on all the legal nonsense of that. Okay, yeah. Fly on rocket and burn cash. 2 years, huh? Look at the damn chart. Okay, I'll look at the chart. I won't bother talking to the people that actually work there. I won't bother talking to the world's biggest investors. I won't bother talking to the astronauts. I won't bother doing that. I'll look at your chart. I don't know. Do you know what? I'm. Oh, hang on. Earnings seconds away. Do you know what? Sick of all the silly stuff. I try to let everybody in, and this is what happens. We'll go back to our members. We only want to be talking to our actual investors right now. People that actually know what they're talking about. That's what this channel is about. The most honest channel on YouTube TV, and we don't want nonsense in the chat.
For fiscal year 2023 earnings conference call. Today's call is being recorded. At this time, for opening remarks and introductions, I would like to turn the call over to Sahasini Chandramouli, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they are made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining the call. Today, Apple is reporting revenue of $89.5 billion for the September quarter. We achieved an all-time revenue record in India, as well as September quarter records in several countries, including Brazil, Canada, France, Indonesia, Mexico, the Philippines, Saudi Arabia, Turkey, the UAE, Vietnam, and more. iPhone revenue came in ahead of our expectations, setting a September quarter record, as well as quarterly records in many markets, including China mainland, Latin America, the Middle East, South Asia, and an all-time record in India. In services, we set an all-time revenue record with double-digit growth and ahead of our expectations. During the September quarter, we continued to face an uneven macroeconomic environment, including foreign exchange headwinds, and we've navigated these challenges by following the same principles that have always guided us. We've continued to invest in the future and manage for the long term. We've adapted continuously to circumstances beyond our control while being thoughtful and deliberate on spending. And we've carved a path of groundbreaking innovations and delivered with excellence every step of the way. That includes Apple Vision Pro, which has gotten such an amazing response from developers who are currently creating truly incredible apps. We're excited to get this magical product in the hands of customers early next year. Now let me share more about our products, beginning with iPhone. iPhone revenue came in at $43.8 billion, 3% higher than a year ago, and a new record for the September quarter. This fall, we were thrilled to debut the iPhone 15 lineup. The all-new iPhone 15 and iPhone 15 Plus feature a gorgeous design, powerful cameras, and the intuitive dynamic island. Powered by the industry-leading A17 Pro, our iPhone 15 Pro lineup has a beautiful, strong, and durable titanium design and the best iPhone camera system ever, including a 5x telephoto lens on iPhone 15 Pro Max. Customers are loving the entire iPhone 15 family, and reviews have been off the charts. In Mac, revenue came in at $7.6 billion, down 34% year over year from the prior year's record quarter. This was due to challenging market conditions as well as difficult compares against the supply disruptions and subsequent demand recapture we experienced a year ago. Earlier this week, we were excited to unveil the next generation of Apple Silicon with our incredible family of M3 chips, M3, M3 Pro, and M3 Max. We're continuing to innovate at a tremendous pace, and our industry-leading lineup of personal computers just got even better. The new MacBook Pro lineup brings our most advanced technology to our Pro users, while iMac, the world's best-selling all-in-one, just got faster and more capable. And according to the latest data from Student Monitor, nearly 2 out of 3 college students chose a Mac. We couldn't be more excited about the future. Turning to iPad, revenue for the September quarter was $6.4 billion. iPad sets the gold standard for tablets, and our competitors are unable to match the iPad experience that is enabled by our seamless integration of hardware and software. iPad is also our most versatile product. In classrooms around the world, it's helping educators bring lessons to life while giving students a window into the world around them. And in artist workshops, design studios, and everywhere else creative minds come together, iPad supercharges the creative process, helping users take their ideas further than they ever could before. Across wearables, home, and accessories, revenue came in at $9.3 billion. Apple Watch has become essential in our lives, and this is our best Apple Watch lineup ever. With Apple Watch Series 9 and Apple Watch Ultra 2, we're giving people even more tools to stay safe and live healthy, active lives. With the new double tap gesture, users can easily control Apple Watch Series 9 and Apple Watch Ultra 2 using just one hand and without touching the display. It feels like magic. Our latest Apple Watch lineup also includes our first ever carbon neutral products, a significant achievement of innovation and determination. Apple's unique ecosystem of hardware, software, and services delivers an unparalleled user experience. During the quarter, we also had the chance to introduce a range of exciting new updates to our software that will allow users to get even more out of their devices. Whether it's personalized contact posters and new FaceTime features in iOS 17, new tools for users to make their experience their own in macOS Sonoma and iPadOS 17, or a bold new look in watchOS 10 that lets you see and do more faster than ever, Apple is delivering an even better, richer experience that users are loving. Services revenue set an all-time record of $22.3 billion, a 16% year-over-year increase. We achieved all-time revenue records across App Store, advertising, AppleCare, iCloud, payment services, and video, as well as a September quarter revenue record in Apple Music. Whether subscribers are waking up to headlines on Apple News Plus, getting their morning workout in with Fitness Plus, feeling the beat with Apple Music on their way to work or school, or unwinding at the end of the day with Apple Arcade, we have so many different services to enrich their day. Apple TV Plus continues to delight customers as well, with new and returning shows like The Morning Show, Lessons in Chemistry, and Monarch. We're telling impactful stories that inspire imagination and stir the soul. Making movies that make a difference is also at the heart of Apple TV Plus, and we were thrilled to produce Martyn Scorsese's Killers of the Flower Moon, a powerful work of cinema that premiered in theaters around the world last month. We're proud to say that since launch, just over 4 years ago, Apple TV Plus has earned nearly 1,600 award nominations and nearly 400 wins. We also offer subscribers an unprecedented live sports experience with MLS Season Pass. We couldn't be more pleased with how our partnership with Major League Soccer has gone in its first year. Subscriptions to MLS Season Pass have exceeded our expectations, and we're excited to continue that momentum next year. With the playoffs now underway, we can't wait to see who takes home the MLS Cup. And nowhere does the magic of Apple come alive more than it does in our stores. Over the past year, we've continued to find ways to connect with even more customers. We welcomed customers to our first ever retail locations in India. We also opened doors to new stores in Korea, China, and the UK, and expanded the Apple Store online to Vietnam and Chile. And we have another store opening in China this week. In September, I joined our team at Apple Fifth Avenue on launch day, and the energy and excitement were unbelievable. Every time we connect with a customer, we're reminded why we do what we do. From simple joys of creating and sharing memories, to life-saving features like emergency SOS via satellite, we're enriching lives in ways large and small. And whether we're working to safeguard user privacy, ensure technology made by Apple is accessible for everyone, or build an even more inclusive workplace, we're determined to lead with our values. Our environmental efforts are a great example of the intersection of our work and our values. Across Apple, we act on a simple premise: the best products in the world should be the best products for the world. We've made our environmental work a central focus of our innovation because we feel a responsibility to leave the world better than we found it, and because we know that climate change cannot be stopped unless everyone steps up and does their part. Our first ever carbon neutral products represent a major milestone, and we're going to go even further. We plan to make every product across our lineup carbon neutral by the end of the decade. And we're not doing it alone. Over 300 of our suppliers have committed to using 100% clean energy for Apple production by 2030. We also continue to invest in entrepreneurs who are lighting the way for a greener, more equitable future. Through our third Impact Accelerator class, we're proud to support a new class of diverse innovators on the cutting edge of green technology and clean energy. Apple is always looking forward, driven in equal measure by a sense of possibility and a deep belief in our purpose. We're motivated by the meaningful difference we can make for our customers and keenly determined to push the limits of technology even further. And that's why I'm so confident that Apple's future is bright. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the September quarter was $89.5 billion, down less than 1% from last year. Foreign exchange had a negative impact of over 2 percentage points, and on a constant currency basis, our revenue grew year over year in total and in each geographic segment. We set a September quarter record in the Americas and saw strong performance across our emerging markets, where both iPhone and services grew double digits. Products revenue was $67.2 billion, down 5% from last year, due to very challenging compares on both Mac and iPad, which I will discuss in more detail later on. At the same time, we reached a September quarter record on iPhone, driven by strength in emerging markets. Our total installed base of active devices reached an all-time high across all products and all geographic segments, thanks to our high levels of customer satisfaction and many new customers joining our ecosystem. Our services revenue set an all-time record of $22.3 billion, up 16% year over year, with growth accelerating sequentially from the June quarter. Our performance in services was broad-based, as we reached all-time revenue records in the Americas, Europe, and rest of Asia Pacific, and a September quarter record in Greater China. We also set new records in every services category. Company gross margin set a September quarter record at 45.2%, up 70 basis points sequentially, driven by leverage and favorable mix, partially offset by foreign exchange. Products gross margin was 36.6%, up 120 basis points sequentially, also driven by leverage and mix, partially offset by foreign exchange. Services gross margin was 70.9%, up 40 basis points from last quarter due to a different mix. Operating expenses of $13.5 billion were at the low end of the guidance range we provided, up 2% year over year. Net income was $23 billion. Diluted earnings per share was $1.46, up 13% versus last year, and a September quarter record. And operating cash flow was strong at $21.6 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $43.8 billion, up 3% year over year, and a new September quarter record. We had strong performance in several markets, including an all-time record in India and September quarter records in Canada, Latin America, the Middle East, and South Asia. Our iPhone active installed base grew to a new all-time high, and fiscal 2023 was another record year for switchers. We continue to see extremely high levels of customer satisfaction, which 451 Research recently measured at 98% in the US. Mac revenue was $7.6 billion, down 34% year over year, driven by challenging market conditions and compounded by a difficult compare in our own business, whereby last year we experienced supply disruptions from factory shutdowns in the June quarter and were subsequently able to fulfill significant pent-up demand during the September quarter. We also had a difference in launch timing, with the MacBook Air launching earlier this year in the June quarter compared to the September quarter last year. We have great confidence in our Mac lineup and are excited about the recently announced iMac and MacBook Pro powered by our M3 chips. Our installed base is at an all-time high, and half of Mac buyers during the quarter were new to the product, driven by MacBook Air. Also, we saw reported customer satisfaction of 97% for Mac in the US. iPad generated $6.4 billion in revenue, down 10% year over year. Similar to Mac, these results were a function of a difficult compare from the supply disruptions in the June quarter a year ago and the subsequent fulfillment of pent-up demand in the September quarter. iPad continues to attract a large number of new customers to the installed base, with over half of the customers who purchased iPads during the quarter being new to the product. And the latest reports from 451 Research indicate customer satisfaction of 98% in the US. Wearables, home, and accessories revenue was $9.3 billion, down 3% year over year. We had a September quarter record in Europe, and we saw strong performance in several emerging markets around the world. Apple Watch continues to expand its reach, with nearly two-thirds of customers purchasing an Apple Watch during the quarter being new to the product. And customer satisfaction for the watch was recently measured at 97% in the US. Services had a great quarter. We reached a new all-time revenue record of $22.3 billion, up 16% year over year. And we're happy to see growth coming from all categories and every geographic segment, which is a direct result of the strength of our ecosystem. Our installed base of over 2 billion active devices continues to grow at a nice pace and establishes a solid foundation for the future expansion of the ecosystem. And we continue to see increased customer engagement with our services. Both transacting accounts and paid accounts grew double digits year over year, each reaching a new all-time high. Also, our paid subscriptions showed strong growth. We have well over 1 billion paid subscriptions across the services on our platform, nearly double the number we had only 3 years ago. And finally, we continue to improve the breadth and quality of our current services, from exciting new content on Apple TV Plus and Apple Arcade to additional storage tiers on iCloud. We believe our customers will love these new offerings. Turning to enterprise, we are excited to see our business customers in both developed and emerging markets expand their deployment of Apple products and technologies to drive business innovation and employee satisfaction. Starbucks continues to invest in Apple technology to bring the best experience to their customers and employees, including tens of thousands of iPads across all retail stores to help their teams streamline order management, operations, and training. In addition, Starbucks recently refreshed over 10,000 Macs to the latest M2-powered MacBook Air for all store managers, enabling them to do their best work and improve productivity. And in Indonesia, popular technology company GoTo is offering Mac as a choice so that employees can have the best tools to be most productive. Today, more than half of its workforce are already choosing Mac for work. Let me now turn to our cash position and capital return program. We ended the quarter with over $162 billion in cash and marketable securities. We increased commercial paper by $2 billion, leaving us with total debt of $111 billion. As a result, net cash was $51 billion at the end of the quarter, and our goal of becoming net cash neutral over time remains unchanged. During the quarter, we returned nearly $25 billion to shareholders, including $3.8 billion in dividends and equivalents, and $15.5 billion through open market repurchases of 85 million Apple shares. We also began a $5 billion accelerated share repurchase program in August, resulting in the initial delivery and retirement of 22 million shares. Taking a step back as we close our 2023 fiscal year, our annual revenue was $383 billion. While it was down 3% from the prior year, it grew on a constant currency basis despite a volatile and uneven macroeconomic environment. Our year-over-year revenue performance improved each quarter as we went through the year, and so did our earnings per share performance, as we reported double-digit EPS growth in the September quarter. We are particularly pleased with our performance in emerging markets, with revenue reaching an all-time record in fiscal 2023 and double-digit growth in constant currency. We are expanding our direct presence in these markets, from new Apple retail stores in India to online stores in Vietnam and Chile. And we continue to work with our partners to offer a wide range of affordability programs so that we can best serve our customers. We're very excited about the momentum we have in these markets and the opportunity ahead of us. As we move ahead into the December quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to at the beginning of the call. The color we are providing today assumes that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. Also, on foreign exchange, we expect a negative year-over-year revenue impact of about 1 percentage point. As a reminder, the December quarter this year will last the usual 13 weeks, whereas the December quarter a year ago spanned 14 weeks. For clarity, revenue from the extra week last year added approximately 7 percentage points to the quarter's total revenue. Despite having one less week this year, we expect our December quarter total company revenue to be similar to last year. We expect iPhone revenue to grow year over year on an absolute basis. We also expect to grow after normalizing for both last year's supply disruptions and the one extra week. We expect Mac year-over-year performance to significantly accelerate from the September quarter. We expect the year-over-year revenue performance for both iPad and wearables, home and accessories to decelerate significantly from the September quarter due to a different timing of product launches. On iPad, we launched a new iPad Pro and iPad 10th generation during the December quarter a year ago. For the wearables category, last year we had the full December quarter benefit from the launches of the AirPods Pro 2nd generation, the Watch SE, and the first Watch Ultra. For our services business, we expect the average revenue per week to grow at a similar strong double-digit rate as it did during the September quarter. We expect gross margin to be between 45 and 46%. We expect OPEX to be between $14.4 billion and $14.6 billion. We expect OI&E to be around negative $200 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, today our board of directors has declared a cash dividend of 24 cents per share of common stock payable on November 16, 2023 to shareholders of record as of November 13, 2023. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from Mike Ng of Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. I just have a question on iPhone storage and demand versus iCloud. As demand for storage grows, are you seeing a mix shift towards higher storage iPhone models, or are consumers mostly opting for the same because of increased uptake of iCloud Plus? What are some of the strategic and financial considerations here and trade-offs as you think about the mix shift towards higher storage models versus iCloud penetration? Thanks.
Michael, it's Tim. We, as you probably know, we started the line with the iPhone Pro Max at 256, and so we are seeing a different mix, if you will, this year than last year. Outside of that, not significant changes.
Great, thank you. And as a separate follow-up, I was just wondering if you could talk a little bit about the market conditions on notebooks and desktops, and any color that you can share regarding the timing of the M3 MacBook Pros this year versus the M2 earlier in the calendar year. Thank you.
Yeah, we're thrilled to have announced the M3 lineup and get the new MacBook Pro and the new iMac out there. We couldn't be more excited about it. We, as Luca said, with the lineup that we've got and the compare issue that we don't have during Q1, we anticipate a significant acceleration in the Mac space for Q1. To just repeat a little bit about the circumstances of the performance last quarter. In the year ago June quarter, we had a factory disruption that lasted several weeks. The pent-up demand that resulted from that was filled in the September quarter, and that made the September quarter not only a record, but a substantial record. And obviously, we're now comparing against that for 23.
Nice earning analysis on Apple stock.
I wouldn't look at the negative 34 as representative of the underlying business performance, is sort of the net of it.
Excellent. That's very clear. Thank you, Tim.
Yeah.
All right. Thanks, Mike. Can we have the next question, please?
Our next question is from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for taking the question, and congratulations on the execution in the quarter. I'm curious, Tim, if you could help us characterize what the demand environment you're seeing in China looks like. How has the reception been to the iPhone 15? And kind of similar question to the prior one, how would you characterize the mix within China as you go through this current product cycle? And I have a follow-up.
Yeah, if you look at how we did in Greater China for the quarter, we came in at, on a revenue basis, -2. But one thing to keep in mind here is that the FX impact was nearly 6 points. So we grew in constant currency. And underneath that, if you look at the different the categories, iPhone actually set a September quarter record in mainland China. And what pulled down the performance was a combination largely of Mac and iPad. Services also grew during the quarter, and the Mac and iPad suffered from the same issues that the company did with the compare issues to factory disruptions in Q3 that were filled subsequently in Q4 of 22. We had in addition to that, we had the top 4 selling phones in urban China for last year, and I took a trip over there and could not be more excited about the interactions I had with customers and employees and others.
Yep. And then as a quick follow-up, I'm curious, as we move towards more of an inflationary component pricing environment, Luca, how do we think about that effect, or how you're thinking about the gross margin at the product level as maybe component pricing starts to turn what's been clearly very favorable over the last several quarters to more of a inflationary environment? Thank you.
Well, as you've seen from our results in Q4 and the guidance for Q1, we're obviously experiencing very strong levels of gross margin. The 45.2 was a record for the September quarter. And then, the guidance for Q1 is obviously strong at 45 to 46%. Our gross margins are affected by multiple factors. Obviously, the commodity environment is one of them, as you mentioned. It's been a good environment in recent quarters. But equally important is the mix of what we sell. And obviously, growth in services for us is favorable. And that has helped our company gross margin. Foreign exchange, on the other hand, has been a drag for several quarters, given the strength of the dollar. We don't provide guidance past the December quarter, which is a very important one for us because it's the beginning of the product cycle for many products. And so we feel very good, very confident about, this coming year. And I think the gross margin guidance reflects that.
Thank you.
Thanks, Aaron. Can we have the next question, please?
Our next question is from Eric Woodring with Morgan Stanley. Please go ahead.
Awesome. Thank you very much for taking my questions. Maybe if I start, Luca, I know that the iPhone 15 Pro and Pro Max are constrained today, but I think some of your comments suggest you should be back to supply-demand balance before quarter end. So I guess my question is, does your December quarter revenue guidance account for any supply constraints? And if so, is there any way to kind of quantify how much supply would be limiting your December quarter revenue performance? And then I have a follow-up. Thank you.
Yes, it's correct. We are constrained today on iPhone 15 Pro and iPhone 15 Pro Max. We're working very hard to get the product in the hands of all the customers that have ordered it. We expect, as of today, that we're going to be in supply-demand balance by the end of the quarter. So the guidance reflects that.
Okay. Very clear, thanks. And then, maybe for you and Tim, you guys have been on the leading edge of innovation across hardware, software, silicon, services, and I'm sure there's plenty of technologies and kind of longer-term projects that you're investing in. How should we think about your capital intensity as we look to fiscal year 24, just given, over the last few years, CapEx as a percentage of revenue had been relatively low compared to the 8 years prior. So should we expect a step up or kind of similar capital intensity? And what are the more notable moving pieces, if any, that we should be thinking about? Thanks.
Well, the big areas of investment for us are tooling and equipment for manufacturing plants, our investments in data centers, and our investments in our own facilities, both corporate facilities and retail stores. And so both for the tooling in our plants and our data center investments, we tend to have a bit of a hybrid model where we share some of the investments with our partners and suppliers. And so maybe that's why you see sometimes a bit of variability. But over the last few years, we made all the investments that we needed to make. And obviously, we're planning to make all the investments that we believe are needed and appropriate in order to continue to innovate.
Great. Thanks so much for the color, guys.
Thanks, Eric. Can we have the next question, please?
Our next question is from David Vogt with UBS. Please go ahead.
Great. Thanks, guys, for taking my question. I know you covered China. I want to pivot to the U.S. for a second. Obviously, iPhone and the business looks like it returned to growth in the quarter, but it's still relatively softer, kind of where I thought it would be at this point in the cycle. And some of the U.S. carriers obviously haven't been that particularly aggressive in promoting upgrades. So just wanted to kind of get a sense, first, what you're seeing from your partners in the U.S. kind of currently and going forward, and what do you expect? And then second, Luca, on the margins, I mean, is it fair to say that the mix in Q1 from a product versus services dynamic is kind of the key driver of the better gross margin guide as a whole relative to, let's say, the December quarter? Or is there anything else? I know you mentioned there's a lot of moving pieces, but is that the primary driver of the uplift in the margin? Thanks.
On the U.S. carriers and the U.S. business in general, it's really too early to call the iPhone cycle, particularly with the constraint around the Pro and the Pro Max, and the U.S. tends to do quite well with those products. It's really too early to tell what the upgrade rates will be and what the switcher rates will be.
On the margin side, if I understood your question correctly about the December quarter guidance, keep in mind that actually December is the quarter where our products business tends to be very heavy because of the holiday season. And so the services gross margins that are accretive to total company have an impact, but not as meaningful as other quarters during the year. And so I think that the main drivers of the guidance that we provided are the fact that we are seeing improved costs and improved mix on the product side of the business, partially offset by foreign exchange, which continues to be a drag both sequentially and on a year-over-year basis.
Got it. So the weakness in iPad and wearables are less of an impact on sort of the margin trajectory in the December quarter?
That's correct.
I guess.
That's correct.
Got it. Thanks, Luca.
All right. Thanks, David. We'll take our next question, please.
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Yep. Good afternoon. Thanks for taking my question. I have two as well. I guess first off, just the services growth rate. There was a tremendous acceleration, I think, in September quarter to 16% growth, and sounds like it's going to hold there pretty well into December. Can you just talk about what is driving this acceleration? Are there a couple of products that have just stepped up in a very meaningful way? Just maybe flesh out like what is driving this acceleration, because it's fairly notable compared to what you've been seeing in the last few quarters.
We had a really strong quarter across the border, Amit, because both geographically and from a product category standpoint, we saw very significant growth. I mentioned the records on a geographic basis. And from a category standpoint, literally we set records in each one of the big categories. We had all-time record for App Store, for advertising, for cloud, video, AppleCare, payments, and a September quarter record for music. So it's hard to pick, one in particular because they all did well. And really then we step back and we think about why is it that our services business is doing well? And it's because we have an installed base of customers that continues to grow at a very nice pace, and the engagement in our ecosystem continues to grow. We have more transacting accounts, we have more paid accounts, we have more subscriptions on the platform, and we continue to add. We continue to add content and features. We're adding a lot of content on TV Plus, new games on Apple Arcade, new features, new storage plans for iCloud. So it's a combination of all these things and the fact that the engagement in the ecosystem is improving, and therefore it benefits every service category.
Got it. That's really helpful. And then maybe if I could ask you about Vision Pro, which I believe is supposed to be launched more broadly sometime in 2024 in the early part of the year. I'm curious, how different do you think the launch and the consumer education of this product or a new category will be versus other things like AirPods or Apple Watch that you've done? And then perhaps any themes that stood out to you from the developers that have been able to use this in the developer labs. What feedback have you gotten from them?
Yeah, that's a great question. There's a tremendous amount of excitement around the Vision Pro. And we've been very happy to share it with developers, and we have developer labs set up in different parts of the world so that they can actually get their hands on it and are working on apps. And I've been fortunate enough to see a number of those, and there's some real blow-away kinds of things that are coming out. And so that all looks good. To answer your question about is it similar to AirPods or Apple Watch, I would say no. There's never been a product like the Vision Pro. And so we're purposely bringing it out in our stores only so we can really put a great deal of attention on the last mile of it. We'll be offering demos in the stores, and it'll be a very different process than a normal grab and go kind of process.
Perfect. Thank you.
Thanks, Amit. We'll take the next question, please.
Our next question is from Harsh Kumar with Piper Sandler. Please go ahead.
Yeah, hey, thanks for the question and congratulations on tremendous execution in a very tough macro. Actually, Tim, the last question is a perfect segue here, given what you are doing with your Vision Pro. So lots of companies are experimenting with generative AI. I'm curious about what kind of efforts you have. I'm sure there are segues into the provision that you have, but I was curious about if you can give us a glimpse on how you might be able to monetize some of these efforts with generative AI.
If you kind of zoom out and look at what we've done on AI and machine learning and how we've used it, we view AI and machine learning as fundamental technologies, and they're integral to virtually every product that we ship. And so just recently, when we shipped iOS 17, it had features like personal voice and live voicemail. AI is at the heart of these features. And then you can go all the way to then life-saving features on the watch and the phone, like fall detection, crash detection, ECG on the watch. These would not be possible without AI. And so we don't label them as such, if you will. We label them as to what their consumer benefit is, but at the fundamental technology behind it is AI and machine learning. In terms of generative AI, we have obviously we have work going on. I'm not going to get into details about what it is because as you know, we really don't do that. But you can bet that we're investing quite a bit. We're going to do it responsibly, and you will see product advancements over time where those technologies are at the heart of them.
Thanks, Tim. Very clear. And for my follow-up, I had a philosophical question. So you guys always try to provide the best experience for consumers. To that end, I think over the last decade, you've insourced a lot of important chips in your phones, in your Macs, iPads, so on and so forth. And that was, I think, a function that ARM wasn't around in the industry from a merchant angle. But now we see the silicon guys, the chip guys moving to ARM architecture. So my question to you is, has the move to internal silicon been economically profitable proposition for Apple? Or is it a strategic one where you simply need to own this and it's vital to your products for the consumer experience? Or maybe there's a path back to chip vendors at some point in time?
It's really enabled us to build products that we could not build without doing it ourselves. And as you know, we like to own the primary technologies in the products that we ship. And arguably, the silicon is at the heart of the primary technologies. And so, no, I don't see going back. I am happier today than I was yesterday, that I was last week, that we've made the transition that we've made. And I see the benefit every day of it.
Thanks, Tim.
Yeah.
Thank you, Harsh. We'll take the next question, please.
Our next question is from Wamsi Mohan from Bank of America. Please go ahead.
Yes, thank you so much. Tim, over the last decade, pretty much, you've gained a lot of share in China. As you look here, some of the domestic players are starting to reemerge, especially in the high-end phone space. I know you touched on China, but how would you see Apple's positioning and opportunity for continued share gains, particularly in China? And how was the linearity in China from a demand perspective? And I have a follow-up, please.
In the September quarter, we set an iPhone revenue record in China. We're very proud of that. And we obviously grew. The market predictions that I've seen would have the market contracting. And so if those are correct, then we gained share last quarter. And so we're very proud of that. I don't know what every quarter will hold, and obviously we just give a bit of color on the current quarter. But over the long term, I view China as an incredibly important market, and I'm very optimistic about it.
Okay, thanks, Tim. And as a follow-up, you obviously had a great services quarter, and part of your services business has these licensing relationships with search partners where you serve a very important distribution function for them. Can you talk about how you think about these relationships and potentially some of the options maybe Apple has to mitigate some of the risk given some of the scrutiny on with some of these search partners? Thank you so much.
They are important relationships, and as you know, we don't get into our commercial relationships in the call. I see them as important, and we make decisions that are in the best interest of our users, or what we feel is in the best interest of our users. And that's kind of what we've done in the past, and how we run the show in the future as well.
Okay, thank you, Tim.
Thank you, Wamsi. Can we have the next question, please?
Our next question comes from Krish Sankar with TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. I had two of them too. First one, Luca, thanks for the color on gross margin. And when I look at it over the last 4 quarters, even if on a year-over-year basis revenue declined, the gross margins have improved. And I understand services definitely helps. I'm just kind of curious, when you look at on a go-forward basis, are most of the big step functions and cost reductions, like the Mac silicon conversion, et cetera, that are done, or is there more room for margin expansion from here? And then I had a follow-up.
Well, on the product side, as you know, when we launch new products, the cost structures of those products tend to be higher than the products that they replace. It happens because we're always adding new technologies, new features, and then we work through the cost curve over the life cycle of the product, and we tend to get benefits as time goes by. The guidance that we provided for December reflects all that, and so we're starting from a better position than a year ago, or than in the past in general. There are other factors that play a role. For example, the mix of products that we sell. Not every product has the same gross margin profile, and so our guidance, our results are reflective of that. And also within a specific product category, a lot depends on the kind of models that we sell, because they have different margin profiles. I think one of the things that we've done well over the last few years is to offer more affordability solutions to our customers in the form of installment plans, trading options, and low-cost financing in general. And what that has accomplished is reduce the affordability threshold for our customers, and therefore they can buy at the top of our product ranges. That has been a big factor in the reason for our margin expansion. We don't provide guidance or color past the current quarter because there's so many different variables that affect gross margins, but we obviously feel very good about the trajectory that we've had in 2023, and now the guidance that we provide for the beginning of our fiscal 24. And we need some of these things because obviously the foreign exchange environment has been difficult and has been a bit of a drag for us, but net, we're very pleased where we are.
Got it. Thanks for that, Luca. And then a follow-up for Tim. Obviously you're seeing amazing momentum in India. I'm just kind of curious, how do you look at, when you look at the India growth opportunity on these hardware units, how to think about ASP relative to that versus like the rest of the geographies? And is there a way to compare or contrast India, growth momentum versus China maybe a decade ago or so at the same point of the rollout of, the share gains in that geography?
Yeah, it's a great question. We had an all-time revenue record in India. We grew very strong, double digits. It's an incredibly exciting market for us and a major focus of ours. We have low share in a large market, and so it would seem that there's a lot of headroom there. The ASPs I haven't looked at them most recently, but I'm sure that they're lower than the worldwide. But that doesn't bother us at all. It just, and in terms of the similarity, I would say each country has its own journey, and I wouldn't want to play the comparison game, but we see an extraordinary market, a lot of people moving into the middle class. Distribution is getting better. Lots of positives. We put 2 retail stores there, as you know. They're doing better than we anticipated. It's still early going, but they're off to a good start. And I couldn't be happier with how things are going at the moment.
Thanks, Tim.
Thank you, Krish. We'll now take our next question, please.
Our next question is from Ben Reitzes with Melius Research. Please go ahead.
Hey, thanks a lot. Appreciate the question. Tim, I appreciate all your commentary around China. It was great to kind of hear about the growth potential there, or your optimism. I wanted to also ask about the supply chain and where is your priority? Do you have a priority to diversify your supply chain? How do you feel about Apple's supply chain around the world? And in particular, what do you think about further investments in the U.S. as well?
You know, our supply chain is truly global, and so we're investing all over the world, including in the United States. You know, we were very focused on advanced manufacturing for the U.S. and have worked on a number of different projects in the U.S., whether it's our venture with Corning on the glass or the Face ID module or semiconductors. And so all of these are advanced manufacturing, and I think exactly the kinds of things that the U.S. would be and are very, very good at. We also invest in other regions of the world, and we're continually optimizing the chain. And so at the moment we learn something that didn't work exactly right, we're tweaking it. And so we're going to continue to do that. But at the end of the day, it will still be a global supply chain.
Got it. Thanks. Next one for Luca. Just really quick on the extra week dynamic. There was also last year an issue with the iPhone production where there was the COVID lockdowns in China.
Yep.
Is it possible to give some color around what that, I guess having a normalized supply chain somewhat this year, what that benefit is this year, and maybe contrast that with the 7-point hit from the extra week? Thanks a lot.
Yeah, thanks for the question, Ben. I mentioned during the prepared remarks, the extra week is 7 points of revenue. We did have disruptions, supply disruptions last year on the phone, on the 14 Pro and Pro Max in the December quarter a year ago. And when we normalize for those two factors, and I said it during the call, we still expect to grow on iPhone. So you take into account the loss of the extra week, you compare it with the supply disruptions that are not going to repeat, hopefully this year. And when you normalize for those two things, we still expect to grow on iPhone.
Thanks a lot, everybody. Appreciate it, Luca.
Thank you, Ben. And we'll take the last question now.
Our last question comes from Richard Kramer with Arete Research. Please go ahead.
Thank you very much. Tim, first off, if we look over the past 2 years, Apple sales are about $18 billion higher, and R&D is up by about 8%, $8 billion, or over a third higher. Can you give us a sense of some of the main components or drivers behind that increase in innovation spend? Is it Apple Silicon? Is it new products like Vision Pro, or is it content to support new services? I think that's one of the top questions investors have. Thanks.
Sure. It's a number of things, Richard. It's some things I can't talk about. It's Vision Pro. It's AI and ML. It's the silicon investment that we're making, the transition with the Mac and other silicon. It's sort of all of those things, but I think you would find that the R&D expenditure in the aggregate looks very competitive versus others.
And I would add, Richard, on this front, some of the investments that we're making in R&D are also one of the drivers for the gross margin expansion. So I think it's important to think about it that way.
That's great. And Luca, you mentioned, or Tim mentioned college students choosing Macs, and you mentioned the record services revenue. What other metrics do you think you could provide to help investors understand how Apple measures and increases customer lifetime value, especially when we see a lot of users entering the ecosystem with relatively lower priced products or even refurbished devices? So you're growing your ecosystem, but how do you think about growing customer lifetime value over the long run?
Well, some of the metrics that I've mentioned before, obviously we look at the installed base of active devices. We want to make sure that the customers that we acquire remain with us, and so we have good visibility over that, and we pay a lot of attention to the behavior of the installed base, both by product and by geography. And then we look at the daily engagement in the ecosystem. So that's why we pay a lot of attention on things like transacting accounts, paid accounts. We want to see if, in fact, we are able to move our customers from a free model to a paid model over time. That's obviously very, very important for us. And so there's, all these, we keep track of all these things, and that's, and then what we do, because I think it's really important, is that over time we add new services, and that, obviously, like, for example, the progress that we made in payments in recent years, very, very important, because we've attracted more and more people that are actually now using additional features on our devices, and we are able to monetize that, right? So we take all that into account. We understand what happens when a customer joins us, when they buy a primary device versus a used device. We understand their behavior, in different markets and so on. So we have, I think, pretty good visibility. And I think the progress that we're making in services, we did $85 billion in the last 12 months. That's the size of a Fortune 50, and it's significantly bigger than it was just a couple of years ago.
Absolutely. Thanks very much.
Thank you, Richard. A replay of today's call will be available for 2 weeks on Apple Podcasts as a webcast on apple.com/investor and via telephone. The number for the telephone replay is 866-583-1035. Please enter confirmation code 0106234, followed by the pound sign. These replays will be available by approximately 5 p.m. Pacific time today. Members of the press with additional questions can contact Josh Rosenstock at 408-862-1142, and financial analysts can contact me, Suhasini Chandramouli, with additional questions at 408-974-3123. Thank you again for joining us today.
Okay, we didn't get any final remarks there, which I was surprised we didn't get, but we didn't get any final remarks. So, well, I shouldn't really be surprised, actually, because it wasn't a great earnings for Apple. We're going to discuss it right now, why it wasn't a good earnings for Apple, as far as an investor. As a fan club, speculative gambler, whatever, you like Apple, of course, fine. But we're going to do a review now So if you want to ask any questions, or you'd like to be in this part of the video, I'm going to make a video now, a reaction to the earnings of what I've just heard. And if this is being done live in this video right now, if you want to have a comment about Apple during the making of this video, if you do a super chat or a crypto giving, you can actually, I think it's above $1.99, you'll be able to have a comment which will read out during the making of this video. So it will be in the video forever. All my videos are evergreen video content like this, will stay on my channel forever. So your comment can be part of the video if you'd like to do that. So on that basis, let me just make sure that we are members only again. We don't want anyone coming in saying anything silly. So let's go to members only. We want to be members only. There we go. All right, this is my reaction to Apple earnings, and it's no surprise, actually, when exactly as I anticipated and exactly as I predicted before the earnings through my analysis. So let's do it right now. Here we go. So let's make a reaction video for Apple. So we've just seen the Apple earnings. I presented it live on my show, as I present all the major earnings and anyone that any of my members request, we cover. I'm keeping the studio green because I am up again today, consistently beating the market, consistently beating Warren Buffett. However, Apple is red. Shall we go red? Well, we probably should then. Let's do it. Unfortunately, we'll turn the studio red. This was not a good earnings. However, Tim Cook does his thing. Good morning, good morning. Tried to spin it as a positive by starting off selling the products. I am an Apple fan. I've got all Apple products. Everything in my life is Apple. I love it. However, I'm an investor, not a gambler. I'm not buying stocks that just something I like or has a great track record. It's where I can make the most money. Simple as that. I buy the products, doesn't mean to say I have to invest in the products. We've just heard the Apple earnings, and it was exactly, sadly in a way, but reassuring that I can still do an analysis, wasn't a surprise that it was a bad reaction, and there was some manipulation played in there. So during my reaction video, I'm going to give you the referral to my previous video, which said exactly what was going to happen in this earnings, and it did. So you can go and check that out. I'll give you that link in a moment to the full technical analysis I did before the earnings. I'm not going to do that during this video, but you can see exactly why it went down before the earnings was reported. You can go and see that. What we've got tonight is a little bit disappointing. So if we're looking to invest, we're looking to see where is our money best. Where is my money most likely to make a profit? Apple's a great company. Of course it is. It's not going anywhere. It's got a good balance sheet. It's no issue with its solvency. We showed you all of that earlier. We're not going to cover that on this video. We're just going to say our reaction to the earnings. Of course, Tim Cook did his best to try to activate the stock. It didn't really work. I am out of Apple at the moment. Here is my position. As you can see, I'm out. What we got just as the earnings came out, and it was visible to those who made this action, because you or I, retail investors, cannot pop the stock like this. It shot up about 2% above this marker here, 2.5% to 3% in moments. That was whales, insiders, trying to activate the stock, pumping it up, knowing it was going to go down. Whenever that happens, you as retail investors should not buy. That is a very dangerous time to buy. You'll get stuck holding the bag. And if you had bought that pump in that moment, you would have been holding Apple stock at a loss for at least 6 months. And I'll show you why. Most of the information is on the previous video. I showed you a 14% at best for 12 months is your target, 14%. If you'd bought that 2% plus 2.5% to 3% above here, you would have been holding the bag for a year. No money made whatsoever. The dividend isn't worth squat, I'm afraid. Dividend on Apple isn't worth anything. It's too small to be worth anything. It's growth you need. So if you'd bought it on that pump, you'd have been holding the bag on Apple for a year. Great, love Apple, but as an investor, we've got to look for the value. If you're not buying the value, why are you here? What is the point? And it went down as predicted. Now we need to look at the reality of the numbers. We're down now over 3 months. We're down over 3 months. That's not good for Apple. If we look at the year to date, we can see it's year to date, it's up 31%. Okay, great. We've just finished a massive overpriced, overbought bull run. Can it continue? No. We're now seeing constant declines, and we're seeing deflation. We're seeing Apple reduce their costs, and I don't see that changing for the next 6 to 12 months. So as an investor, we don't want to be doing that right now. Okay, I am going to get back in Apple around about the 150. Some of you say, "Oh, you've got no chance." We've got every bit of chance. Let's look at some metrics right now. Over the last 90 days, the last 3 months, this was the sentimental analysis of the stock. Predominantly good news. The green is the good news, the red is negative, and neutral was 207 is the blue, 217. So over 90 days, the company had mostly good, positive news to put out. The last 30 days, it decreased. More negative news. Over the last 7 days, it decreased again. More negative news. Today, it decreased again. Much, much more negative news. So for an investor, this is a really bad sign, and you don't want to be in the stock at this point. If you're in it years ago and you bought it for $50, that's fine. But you don't want to be in the stock right now or looking to buy it right now. That makes no sense at all. Sorry if you love the stock, but it just doesn't make any sense. Let's get some more information, which is very important. Very important. This has just happened. Apple exceeds expectations with strong iPhone and services performance despite fourth consecutive sales decline. This is going to continue now. We're going to see more because they're having to reduce the price of iPhones to try and encourage buyers. We are getting exactly what the Fed wanted. We are now getting the economy to cool down. Inflation's coming down. Great. Interest rates have peaked. Great. But remember, it all has a lagging effect. It takes time for it to filter through. The economy is 6 months behind the markets. The market is ahead. The market is pricing in the next 6 to 12 months. The economy is behind. The economy and people, human beings buying stuff, are now experiencing what the Fed has put pressure on over the last year and a half or so. Even though rates have peaked and interest rates are going to go down in the spring and the summer, I'm 100% certain of that. I called the last two price rates, and I also called the bull market before the banks called it. So I've got some record of being right about that. That's great. And as investors, we're ahead of the game. But the people buying the stuff are still going to feel the pain for another 6 to 12 months. So we're still going to get some bad news. Still going to get some negativity on Apple. If we look here, Apple announced its 4th fiscal quarter earnings, surpassing analysts' predictions for sales, earnings per share. Great. They beat earnings. Great. However, as we know, what's important about earnings is not what they do. It's what they say for the future. As investors, we're looking to see where our money is best placed over the next 6 to 12 months. The company also disclosed a decline in overall sales for the 4th consecutive quarter. That's a very long track record of it going down, and it's going to continue. So if I bought Apple today at this valuation, I'm going to be stuck in the stock. and that's not what investors do. All non-iPhone hardware businesses experience a year-over-year decrease, notably the iPad and Mac segments. To compensate for this decline, Apple emphasized the stronger than anticipated growth of 16% in its online services division. Okay, some good news, some not so. All right, I've got, while I was preparing during this earnings, I was preparing some other information, which I'm going to share with you now on the screen. Thank you very much for your subscription, Michael Howes. Thank you for supporting the channel. Let's listen into this, and I'm going to give you my reaction on this on this interview that happened just some moments ago, and we can react together to this. Very, very important reaction to Apple earnings this evening. All right, let's go into it. Here we go.
Apple doesn't provide forecasts anymore. It will give us some kind of hint of what it's looking forward to on the conference call. But in terms of the numbers that were reported, what gets your attention?
So this is just a few moments ago, very latest news. Let's hear this analysis. Apple service revenue reaches new all-time high. That doesn't mean to say you buy it. That means you find an entry and have patience. It's where it's going next is what's important.
Oh, the services revenue really stood out to us. I was not expecting this big of a beat. So that's good news. You know, on the other side, China numbers were below what we were looking at. So that's a bit of a fail. So the most important part is going to be when they get on the conference call, they need to tell us what's happening in China and what can we expect for next year. I think that remains the most important question for the stock right now.
And of course, we've just found out things are slowing down. So it's very nice to have a headline breaking news. We got a beat, but it's more important now what's going forward. And again, I can't overstress. If you want to look at my previous video of the balance sheet, the cash burn, the revenue, the so on and so on and so forth, you can see quite clearly, if you study the numbers, not just join a fan club, you will see that Apple now is too expensive. As an investor, we are looking for value. You don't pay $10 for a can of Coke. You only pay $1. Let's have a little more of a listen.
Let's talk a little bit more about China, though, because, I mean, the more you look at it, coming in $2 billion less than what Wall Street had expected, it's a massive miss. How much of a long-term problem is that here?
It's a huge problem, and we heard on the call that Tim Cook tried to downplay that. It is a huge concern. I think they are quite concerned from the standpoint of investors. Great company, but investors aren't going to stick around. They're going to sell. They bought a long time ago, the majority of Apple investors, and they will buy back when it's lower.
Yeah, I think that's the biggest thing we're going to find out on the call as to whether they are losing market share to Huawei, or is this more a consumer spending slowdown. You know, if it is a consumer spending slowdown, then I personally am not that concerned. Maybe things get pushed out for another 6 to 9 months. But if they're losing market share to a local phone maker, I think that's a bigger concern, because China is, for the midterm, the big growth driver for Apple's products. Now, the services unit, I think this is going to be another story, is how did they actually manage to get 16% growth right now, where we were expecting a lot less than that.
There's no doubt about it, in my opinion, that we will see some competition coming from Huawei. I'm very certain of that. If you look at their numbers, you can see that they're taking market share away. So yes, they are. Apple is still a great company. However, it's losing market share. It's reducing prices. It's not a good time. I repeat, not a good time to jump in and buy the stock right now.
We should mention that for the iPhone, the revenue of $43.81 billion is higher than what analysts had anticipated, which was $43.73 billion. But as Mark Gurman, who is kind of our expert on all things Apple, certainly Apple devices, he makes the point of saying this was a slight beat, but not all that impressive, given that a year ago, the iPhone 14 Pro couldn't be sold for several weeks because of the Foxconn slowdown.
Exactly. It's all very well saying the headline, it's a beat and it's great, but it's a far worse number than we've had in the past. iPhone is losing dominance, no question. It's not innovating enough. Nothing's changing. I have not bought a new iPhone for years. I've only got the recent new phone because mine fell in the water and I broke it and I had to replace it. But it makes no sense. There's no reason to buy the iPhone. I've got the iPhone 14 Pro. It's no better than my iPhone 10. Nothing's changed, and they're telling everybody the camera's a bit better and the battery's a bit better. And by the way, my phone is about 8 months old and it's already down to 83% battery capacity. There's something wrong with my battery right now. So things are not all great in the camp with Apple.
Due to COVID. So you're looking at comps that should prove more favorable for this year and hasn't. Anurag, what do you make of that?
No, I think that's the most important piece. We are running into very easy comparison in the current quarter or the December quarter, which is the holiday season. Last year, we were not able to get phones because of a problem in China. So if they are not able to show growth this year, then it's going to be a bit of a problem for them. I think the comparison.
Absolutely. And what we're going to see is that the big investors, the Warren Buffetts, the institutions, they're on top of the figures. As am I, by the way. With my software that I have now, the equipment that I have, I'll be looking at the sales daily and weekly, and I'll be looking to see if there's any rally in December. But I'm going to put my name in the sand now and say it ain't going to happen. So Apple, great company, great for the future. Just not investing in it now.
Comparisons are really easy, but China remains the big wild card right now.
And Anurag, let's also talk about Mac, because, I mean, when you think about the Mac family, it's definitely become a smaller percent of their overall shares, but still, it was a huge miss on Mac as well, about $1 billion below expectations. But you weigh that out across some of the other areas of the business. How do you think about that?
Very, very good point. I've just bought myself the new Mac Pro Studio Max Ultra 2, best computer you can buy at the time, a few months ago. And again, they're not selling them. They're very, very expensive. I was lucky, to be able to afford one, but they are seeing a sharp decline there as well.
Yeah, so from our side, Macs will outgrow the entire PC market over the long run.
Long run. Long run is the key word, not an investment right now. Put your money in Palantir when it comes back down. It's too expensive right now. Virgin Galactic, yes, I know, I say it. There's other things now that have far greater growth. This is not a dividend stock. There's no dividend advantage here. It pays a dividend, but the dividend is irrelevant. It's a growth company. It can't keep growing at the rate it has without some innovative change.
And that's because they have their own chips. The product is phenomenal. But at the same time, we know the PC cycle moves up and down. So I'm less concerned about the Macs. Longer term, I think they're going to gain share at any given quarter, at any given 6 months. Things could be lumpy. So if they fell down right now in 6 months, it could be the exact opposite of that.
Yes, it could very well be the opposite of that in 6 months. But right now is not the time, in my opinion, to buy into Apple. Anyway, there's my reaction to the earnings. If you want to see my full technical breakdown of who's on the inside buying Apple, if you want to see who's selling on the inside of Apple, if you want to see their balance sheet, the expenditure, the margins, how they're moving and changing over time, fine details, I have all of it in a video I made before the earnings. Just before the earnings, I told you and predicted accurately where the stock would go, what it would do, and it did. If you want to go and check that, click above my head. That will take you to the full video of the technical analysis that I did. Remember, everything on my channel is aimed to be the most honest channel on YouTube TV. It's not a YouTube channel. Just because we're on YouTube. Is Sky News a YouTube channel? Is the BBC a YouTube channel? No. I want to be a TV channel. This is a TV studio, and I am not here to sell videos, even though that's might appear to be what I do. It isn't. I am here to build a community as I did as the World Piano Man when I performed around the world. I'm here to build an audience, to be known as the most honest person on YouTube TV. I put the effort in to bring you the best, most reliable, most accurate, most detailed information supplied to me by the best industry and the best software that I can get my money on. Plus, people support me with different technologies like some of you just seeing a few moments ago. So, This is not to try and tell you to you're all going to get rich by buying Apple, or we're all going to lose our money. You won't see me doing those videos like Meet Kevin and others to try and sell the videos. You will follow and come back to me because we'll build a community together based over time, based over trust. My thoughts tonight is no, not by Apple. It's not the best use of my money right now. Check out all the videos. Join me on X. Sign up for my newsletter. All the links are here and below in the description. You can get my newsletter. We've got giveaways, information about what I'm buying. I always post on X before I buy anything and before I sell, so you know what I'm doing. Why do I do that? Again, that doesn't benefit me. It's because I want to demonstrate to you that I'm being open and honest. This is my real trades, my real money, my live positions. My whole bank account is here live in front of you. And talking about that, it might be a red day for Apple, but it's not a red day for me. It's a very green day. Up today, 8.4%. This is my portfolio, way ahead of the markets, way ahead of Warren Buffett. There is my portfolio. $52,000 started at $5,000 just 2.5 years ago. That's it from me. Over here, you'll find more. I was going to do that, wasn't I? Over here, that's better. Over here, down here, you will see we learned about this afternoon. The earnings and everything else. I will repost the earnings shortly when I've optimized the audio to give you the best experience. Until tomorrow morning for our season 3, we're back with our Friday phone-in. And then, of course, we have Sensei on Sunday. Make sure you join and tune in for Sensei's setup for the crypto week and all the technical analysis for the week. Until then, as always, take care of yourselves and each other. All right, there's my reaction video. That will come out very shortly, guys. Thank you very much for joining me. What's going on over here? Let me close that down. Anybody got any questions before I go? That's it from me. We're out of here. We'll go back to general public because I just didn't want clowns and trolls coming in during the making of the video. There we go. Let me just go back to here and to put it back to general public. Okay, subscribers. There you go. Any comments? Any thoughts? We're back in the morning. Loud, I'm trimming my position and buying more. Google, Meta. Great analysis, Martin. Thank you. Loud work. Thank you so much. Indeed, loud work. Out of those 3, there is only one you should be buying, in my opinion. Loud work. I'm trimming my position and buying more PLTR, Google, or Meta. Which one should you be buying? Meta is too expensive. Google, you should be buying GOOG, not L, because you're not voting, are you? And PLTR is too expensive. So you shouldn't be buying any of those right now. Sorry about that. I just had to say that. Google, exactly. GOOG. Just like what Zach Zate said. Absolutely right. You don't want to be focused on GOOGL. No, you want GOOG. You do not want to be looking at that one. That's for voting rights. Very different. Okay, it's the same, but you don't want it. It doesn't have the liquidity. You don't want that one. Right. Are we good? Are we done? Any questions? Let me just see. I want to thank everyone today. I'm blown away. Is Sensei in the chat? Sensei, you here? Look at this, mate. Look at the amount of members we had today. These are the paid members. Look at this. Just going through the roof at the minute. And we're getting lots of ladies join as well, which is really nice. Because we're 99% guys here on the channel. Really nice to see so many ladies now joining our audience. Sea Lover, MNTS, I've been telling you. Sea Lover, unfortunately, as you know, I have to focus my time on the members of the channel to give the best service to them. And I've not had the time to review your stock. If you were a member, I would have done it. I would have made a video on it. I would have bought the stock. I'd have promoted it, done everything. But I have to focus on the members. If you remember, I would do it tomorrow. But, I have to focus on the members. Tomorrow, I have 2 more reviews to do. For Michelle, I'm doing Disney tomorrow. And for Nikunj, I'm doing ChargePoint. So if you want me to do a review for you, a full back test with all my technology, remember, the software that I'm using costs hundreds of dollars to buy and to pay subscriptions for. I provide it all free to you. So you just, as a member for $2 a month, you get all the technology that I am using. And also I will make the video for you as well. So it's all presented for you. Should you wish to buy the software that I use, then I have members discounts for all of it. So you don't even need to pay the full price. Good evening, everyone. It was a pleasure making money with you all today. I like that. That's a good way to end the show. Right. Okay. Day trader of the day. Let's do day trader of the day. Let's get out of here. I'm up 8.43. Up 8.43%. If you want to take part in our daily competition, this is what you have to do. If you're behind the screen, let me show you how it works. We'll do it now. You go over here to underneath the video, mobile or computer. Press the red button. If it's behind the screen, it's grey. Look. If you go here, it's grey. All you do is press the live button. Press the... Oops, there you go. Press the live button. It turns it red. You're now up to date. You're 30 seconds behind. Now what you do to come completely 10 seconds behind, you click the cog, you click play black speed, you go double speed, and now within a few seconds... all you do is press the live button. There you go. Press the live button. It turns it red. You're now up to date. You're 30. And now you are a couple of seconds behind me, literally. And now when I do the competitions, you won't be behind and missing out. Up 8.43. Let me come back to here a minute. I 100% get it, Martin. I appreciate your honesty as always, but it's not for me. It's for you. It's for you. Oh, I see. Oh, it's not for me. It's not for you. You didn't want to review. Well, thank you very much. I appreciate that. That's fine then. But with me, I've got a very structured portfolio. I am in space, the space world, because you're talking about MNTS. I'm in the space world with Virgin Galactic, which is $100 stock once we are all done. So there's the first thing. So I don't need anything else really. But to diversify, I am in Rocket Lab as well, and that's a $40 stock. So a 10x pretty much. One's a 1000x, one's a 10x. Sorry, 100x, beg your pardon, and one's a 10x. So I am in that space. I'm not looking for another space stock. The thing is, I do know briefly with MTS, it's overvalued right now, and the only reason why MTS is running today, or other things, many stocks that don't have great value are running today, like Apple did before the earnings, is because we're in November. Historically, it's a good month for the stocks. We are getting a bit of a rally to the end before we get the dump because of the harvesting, and we're just due a rally anyway. People get fed up with this, and they want to come into a Santa rally running a little bit. So there's a lot of stocks that have no actual value to rise, but they are anyway. Without going into the full balance sheet, that is the reason why a lot of stocks may be running right now. So we're not looking for that kind of thing. All right. Day trader of the day. It looks like I'm the only person, right? Am I the winner? Nobody did it. No one. How come no one did the day trader of the day? All right, well, I'll take the prize. Let's get out with it. I win. Thank you very much to me. How did I win? Am I the only person? How come I'm the only person? Anyway, give myself the thumbs up. All right, that's it from me. I'll see you back in the morning. Look out for all the important videos tonight. There's a lot of members-only videos coming out tonight that you want to see. That's it for me. Thank you so much indeed. And I'll see you back in the morning. Let me bring up the credits. Roll the credits. Let's get out of here. See you back in the morning. Thanks for your support. Subscribers, Michael House, member, David Davison, Super Chats, Jordan Allen. Thank you very much indeed for the Super Chats. Thanks to the subscribers and the followers. Absolutely brilliant. Good day. That's just the public subscribers. There's been many more. I don't know if it will show now because we just had an update a few moments ago. Let's have a quick look. 11,335. No, I only did it like about 10 minutes ago. There we go. Yes, it's gone quiet now. Everyone's gone home. Everyone's gone home. Right, that's it for me. Subscribe, says Jordan Allen. Jordan Allen says, yes, you need to be a member of the channel. There you go. All right, that's it from me. You might notice I've been wearing a jumper the last couple of days. It's been a bit cold here in Texas. When you think of Texas, you think of baking hot. Well, you'd be right. It's baking hot nearly all year. Do you know what? I just had a thought. Just for a moment, I'm going to be a typical YouTuber. Are you ready? I'm going to be a typical YouTuber that dresses up silly. I'll put me out on Sideways. There we go. It's been a good day. You can get one of these hats in my shop if you want. It's got the proper logo. Look at that. Look. Proper logo. Very nice. Thank you ever so much indeed for being here. Cheers to all of you. Have a great... You get one of these mugs as well if you want. Oh, yeah. You can buy mugs. You can buy T-shirts. Even jigsaws. That's it from me. Thanks a lot. See you back in the morning. Have a wonderful evening. As always, take care of your money, your crypto, yourselves. Most importantly, take care of each other. Bye for now.